What's going on, everybody? This is Brandon Galaxydoc from Galaxydoc Markets. This is my new channel. We revamped the previous Rampage Trades channel into something more educational and more engaging, I think. And I here to bring you. I'm going to try to do this every morning if I can, if it's important. A pre-market trading video, April 30th, 2024, where we're going to be going over a lot of the metrics, where we are setting up with key metrics, including the macroeconomic indicators, as well as the pre-market action and some of the stocks that we're looking for in the pre-market. So the thing is that as we said, we're going to have a choppy market action leading to FOMC. There's not a lot of things to have in terms of a lot of the big moves that we can take advantage of in terms of trading, but we certainly can be opportunistic in our trading when we're doing this. So without further ado, let's move forward. Here's the disclaimer. Pause it, read it. If you agree, please move forward. All right, so let's start out with my favorite directional indicator, which is the McClellan Summation Index. I'm not going to spend a lot of time. As of yesterday, we are in this zone of action, meaning that these are the targets that we are projecting. And of course, we're chopping around at that area. We have a little blip higher. And as you know, we are in the middle, not middle, maybe towards the tail end of our dead cat bounce. That reflexive bounce, the relief rally that we talked about that began on Monday. And now we're waiting patiently for this to kind of play itself out and also to give us the further direction. Are we going to go higher or lower? And that is going to come pretty close after tomorrow, where we have a lot of economic numbers ahead of the FOMC numbers. And then, of course, 2:30, where the Fed is going to be giving their color on that. If you want to see what our opinion and our research is on the FOMC rate hikes and rate hike odds, that was on the previous video that I released over the weekend. Please watch that. But right now we have a little bit of a blip. I still think that the markets are going to be targeting on the ES 5150, somewhere between there to 5225, which is equivalent to 512 to about 515.75 on the SPY. Okay, why do I not give QQQ numbers? It's just a stable market. It's SPY and ES is the entire total stock market. It basically gives us a better clarity on what is going on in the marketplace. We do have a MACD that is beginning to maybe curl over a little bit higher, so maybe we are going to get this range here. I would not be interested in aggressively getting short until we hit these numbers, hit these areas, and then stall out. Right now, there is no evidence of that, and it is just range bound. And for the better part of traders, both bulls and bears are going to get chopped up waiting for the Fed. Okay, now let's look at our put to call ratio. So we did break down after hitting here, and we correctly called the fact that we're going to have a relief bounce or a dead cat bounce. We are now below this trend line. However, we know a new trend line is setting up on the put to call ratio. Right now, people are so bullish still. I mean, this complacency is amazing, and we just need to continue to roll with the punches in that regard. Okay, let's do some real quick analysis of what happened in the broader markets and then what we're looking at. Okay, so let's go over the SPY, and SPY really is continuing to stall out right over this red line right here. That's the 20 SMA. Okay, I'm asking for this thing to pop a little bit higher, and I'm looking for a stall out into this area. If it extends higher, that's fine. We will take advantage of that. But right now, SPY is basically stalling. Okay, when you look at all these actions, basically what you're looking at is that there's not a lot of improvement in terms of directionality, either from the MACD, CCI. It's just kind of flattening out, although one could argue that we're forming a little inverse head and shoulders on the CCI, and I am waiting for that to pop higher so we could have an objective short entry somewhere here, or if it extends higher after the FOMC into that area. Make no mistake, we are waiting for this dead cat bounce to end. We took a great advantage of it last week. We're just being patient as a group at the moment. Okay, so SPY on the weekly, nothing really changing, right? Really for the week after Monday, we just have a little blip here, and that's all we're waiting for, right? All the other indicators on the weekly, it's very different from the daily. Is that it is very bearish. We got the PPO ADX showing very bearish signs that there is further downside coming. So I believe that after one additional pop, maybe we get that after the FOMC announcement, although I don't see how they're going to spin this one. They will not be able to cut interest rates. Okay. And I think it's by design. I've been saying that for a while. So here is the SPY. Let's go look at our indicators. Here's the 10-year Treasury from as of yesterday. TNX, like I said, is on a little bit of downward position, and I think it's going to come down. And that's what's I think is going to cause the ES and the SPY and the broader markets to bounce ahead of the FOMC. And then once finding support, probably right around here on the 20 SMA, I think we're going to resume higher. It's just that they absolutely cannot get this inflation under control, and I don't foresee that ever becoming able to be controlled unless they do something drastic, like raising interest rates at this point. US dollar continues to chop sideways in a bull flag formation, right? We talked about that, and we need either a breakout or a breakdown. US dollar is basically inversely correlated to the markets, and so higher US dollar is very, very negative for the marketplaces at this point, okay? So let's just go really quickly over gold. And I think gold is beginning to form a nice base after having this torrid run, right? And so we're having this kind of the bull flag channel, and I think the next likely positioning is to go higher, okay? And that's what we're looking at. But right now, gold is, has a little nice little channel forming down here. Flattening out on the MACD, and then CCI just finding support, and I think it's moving higher. Okay, so and that's kind of what we're looking at this moment. And so the other thing is, let's look at what VIX is doing. And I correctly called last time. I said, hey, look, this VIX right here is a sign that we're basically going to stall out and start coming back in. And so we're now going below this 20 SMA. I think the target is 1404, and that's why I'm looking for that 5150 to 5225, 512 to 515, maybe even to 517 level. And that would start getting me very, very excited and hot and bothered about putting on some short positions. But right now, you just got to trade opportunistically. Okay. Now, there's a couple of things that I want to talk about. PayPal just reported earnings, and this is what it's looking like right now as we speak. Let me just grab this if it'll come over. Okay. Oops, where'd it go? Just one second. So here's the PayPal. This is a pre-market, folks. Pre-market action. They like the action and basically popping higher. And I think I want to see something, basically a retracement here, like everything else, just like on Microsoft and Google. We took some of our positions off that we carried over the weekend for a nice 3x trade on these, folks. I think that similar things are going to happen. I think this requires a little bit more patience, but you shouldn't be shorting the whole. IV is very, very pumped, so wait about 15 to 20 minutes if you want to partake. But this is a very good potential short idea. The only pause that I get is that we have that FOMC tomorrow, so this should be a quick lightning strike. I think the range is going to be somewhere between 72 to 64 over the next week or so. For those of you that are swashbucklers, this is something that you want to look at. The other thing is Meta. Meta is, they had that dead cat bounce, filled some of the gap, and I think it's setting up nicely. So anything around 436, 438 would be a great entry for 400 puts to 390 puts. Okay. Buy some time on this. Once the sell-off resumes, this is going to really, really start moving lower. Okay. It's a bloated pig. All right. So let's move on. The other one that's very, very interesting for us to be looking at is obviously Amazon. Amazon reports earnings actually today after hours. So this is something that we're really looking at. Look, Amazon's been getting a lot of pass. It's been very bullish post earnings, ripping higher, but we're really near the end of the top. A lot of people think that this is a reversal candle. All it did was find support at the 100 SMA, and now we are basically stalling out right over this trend line. It is risky. I never advocate people to front run earnings. However, in this instance, with the retail and the credit contractions for the retail and the inflation that is happening, and then obviously there's some distortions in the shipping and logistics. I think Amazon is a retailer. And what happened to the retailers, including Restoration Hardware, Lulu, all of those guys. The only safe retailer right now, I think, is Costco. Even then, I'm looking at that for to stall out, so we can look for a shorting opportunity if we get further downside. Okay, folks. After FOMC, I mean, they could ramp this much higher. Yes, they can do that, or we could crash. But the crash that everybody talks about, everyone thinks that I think the market's going to end tomorrow. No, I don't. I think this sell-off at this bear market is going to be long and contracted over the next 2 to 3 years. 2025 to 2026 is where I think it's going to end. Now let's go back to Amazon. I am bearish on Amazon at post earnings, but the question is, do you front run this or do you wait until post earnings and then take your positions? You can do that either way. The safest bet is to wait because after the earnings, anything possibly could happen. They could come back out and say that their AWS division and cloud and everything is just doing splendid and that they're getting into AI. Then it's most likely going to pop. However, based on their business fundamentals and the fact that even the corporate world, they're scaling back on investments and spending on such thing as capital expenditures and as well as basically spending on and beefing up their AI initiatives. Okay, when companies don't have money and they're being squeezed because of high interest rates, this is what happens. Thanks, Fed. But anyways, realistically, this presents a conundrum for us. And the thing is that I am bearish. I think that the numbers, even if they beat, there's just not much more upside that they can surprise on. Now we have this on the PPO ADX already a formation of this bearish formation. We're at the top end of the accumulation and distribution phase. The only way I think it could go is down. This shows you that everyone that's bought has already bought. And so basically that's kind of what we need to look at. So this is that little tidbit on Amazon. The other thing is on the weekly, it's super bearish looking. I mean, let's look at it. All right. We basically topped out, we had this torrid run higher, and so this earnings really, unless they have something spectacular, like they're going to start building stores and they're going to start serving Martians and Mars and Jupiter. I don't see how this is going to work. But MACD is finally crossing over in a death cross fashion, and CCI is already telling you that it's most likely going to be moving lower. And so what we're looking at now is what is the PPO ADX showing us. And the PPO ADX, again, just like the daily, is kind of in line. It's telling you we're coming down. We have the accumulation distribution, maybe goes a little bit higher ahead and then starts coming down. When you look at the average true range of this, okay, it's been on a downtrend and now it's peaking up. That peaking up doesn't mean it's bullish, guys. It just means that it's getting ready to set for a price expansion that's ready to happen. And I think, Amazon is kind of a nice candidate to look for before or after earnings for some bearish action coming up. Even if they pop after earnings, I think they're going to be sold just like Google and Microsoft is being right now. Speaking of Google and Microsoft, we talked about it. There's more downside on that, folks. It's just that in our group, we took profits yesterday. It's a nice 3x trade. It's better not to be a pig and wait and see what Foul Powell has to say and what kind of lies that are going to come out of the Fed. I'm sure they're not going to, guys, the Fed is not going to cut rates. Okay, this market is basically priced for perfection at this point, and they're not going to cut rates at this point. Okay. The other one that we're going to be super interested in is this SMCI. Okay, SMCI will drive the markets, and at this point, I do believe that there is going to be a pop and a drop potentially, unless they just crap out. But Wait for a pop and a drop. Do not front run this one. But it is setting up for a potential, just like Google, Microsoft, and everything else. And watch PayPal for a pop and a drop, right? This is what we're looking for. All right, folks. So that's pretty much it for me. And I would like you to support this channel. I started a new channel. Nothing other than the fact that I wanted a new direction. I want to do things on my own. And I feel like on my own, I can offer much better offers and do better things for everybody. So on this thing, I want you to like us, subscribe us, tell everybody we're over here at Galaxydoc Market, and it's Brandon. And then, we're open to everybody. We have a thriving membership community as well as a lot of great courses coming out. One thing that I want to talk about is that there's things that we will cover in the TPO as well as the volumetric footprint charts and all of those things that we use with our pivots to find and gain insight into the marketplace. Okay, so without further ado, thank you so much for watching. Okay, and like us, share us. If you have any questions about our community, click the link below. It'll take you to our website and just kind of find out. But you don't have to join anything. I'm committed to this channel. I want you to learn. I want to help. And let's go catch some alpha. Get some alpha, folks. Okay. If you don't know what that is, you definitely need to email me. Okay. Bye bye.